Hi, this is Lara at Elliott Wave Stock Market with an extra video update for you this week after the session Thursday 18th of August has closed. The trend remains the same until proven otherwise. We've got a strong bullish signal today from on-balance volume. The wave count expects upward movement. Indicators are telling us we're still most likely in an upward trend, although price has been overall sideways for a while. Assume the trend is the same, up, while price is above 2147.58. Midterm targets are the same, 2332 or 2445. If we see price make a new low below 2147.58, then probability will shift to seeing a deep pullback, but there just isn't enough selling pressure at this stage, evidenced by volume in this market, in order to pull price deeply lower. It just isn't happening, and I don't think it's going to happen yet for some time. This is the main wave count at the weekly chart level. It expects that we're still in a bull market. The last run of the bull market began here, and the target is 2,500 for the bull market to end, where cycle wave 5 will reach equality in length with cycle wave 1. This is a bull market of fifth wave at cycle degree within a super cycle degree fifth wave, and so it would be expected that it's going to show a fair amount of weakness. At this stage, it looks like it most likely is subdividing as an impulse. There's only one other structural possibility for cycle wave 5, and that would be an ending diagonal. That's why I have an alternate to cover both possible structures. So far within cycle 5, we have primary 1, an impulse over here, primary 2, a very common expanded flat correction over here, and primary 3 begins here. Now normally you would expect a third wave to be stronger and also normally longer than a first wave, but within a fifth wave at 2 wave degrees, what we might see, and so far what is happening, is a weaker third wave. Primary 3 may be weaker than primary 1, and then primary 5, the final little run up to the end, may be even weaker still. We may see persistent weakness becoming stronger and stronger as price slowly limps up toward an end. If my target is wrong, it may be too optimistic, but price is trending up, and we want to be on the right side of the trend if we want to make money, and that's what we're all here for. Primary 3 begins here. So far it must subdivide as an impulse if it's within an impulse for cycle 5. So far we've got intermediate 1, intermediate 2 very likely to be over here, intermediate 3 likely to have begun. I'm going to leave the invalidation point at the weekly chart level though down here to allow for the less likely, very unlikely possibility that intermediate 2 might continue further sideways. If it does, it can't move beyond the start of 1 below 1991.68. If it does continue sideways, I would not be expecting a substantial pullback. It would be a sideways structure. Let's have a look at why at the daily chart level, where the end of primary 2 and the start of primary 3 is this point here, because intermediate wave 2 subdivides as a 3-3-5 expanded flat correction. Now, if this is just wave A of a bigger, more time-consuming structure for intermediate 2, or if this is wave W, the first structure of a double flat or double combination, then all of those options, a bigger flat or a double flat or double combination, are all sideways moving structures. It could be A, B, C, or it could be W, X, Y. They are all sideways movements. And so if intermediate 2 does continue further, which today I think is even less likely, the probability of that has reduced even further today, but if it did, then it would just be a sideways movement. And so if we see a new low below 2147.58, which I think is less likely today, but possible, if that happens, I would not be expecting a deep pullback. I would be expecting overall a continuation of this mostly sideways movement, although it does have an upwards bias now. The target for cycle 5 is the same. The short-term confidence point for this wave count is 2203.68. If this is just minor wave A of intermediate 2 and we have a 5-3-5 up for minor B, then there's no maximum limit for a B wave within a flat, but there's an Elliott wave, or a convention within Elliott wave, that states when your B wave is more than twice the length of what would be the A wave, the probability that a flat is unfolding is so low, the idea should be discarded. That price point would be above 2203.68. So if price does make a new point above that confidence point, then I will have a lot of confidence that intermediate wave 2 is over and intermediate 3 within primary 3 up is underway. It looks very likely that it's over today. It looks likely that intermediate 3 began here with an impulse for minor 1, another 335 expanded flat for minor 2. So we've got an expanded flat here for primary 2, an expanded flat here for intermediate 2, and an expanded flat here for minor 2. We have this pattern repeating and it's continuing. We may see, once we get up into the fourth waves, more shallow and quick zigzag corrections for the upcoming fourth waves. Let's have a look at how minor 2 has ended at the hourly chart level, where minute wave B is this point up here. Minute wave C, a nice 5-wave impulse to the downside with an extended fifth wave. We're seeing these extended fifth waves and downwards impulses quite commonly recently for the S&P. We've got a nice contracting regular triangle here for a little fourth wave and a nice extended fifth wave. From this low to this high, we have so far what looks like a good impulse, and we might have a zigzag complete here for a quick, shallow second wave correction. On balance, volume is giving a strong bullish signal today, which supports the labelling of minute wave 2 as over here. But it would be rather brief in comparison to minute wave 1. I'm going to use the cyan trend line to give me a guide as to whether or not minute wave 2 is over tomorrow. So far, I've drawn it from this low along to the low of this candle here. So far it's showing us where upward movement is finding support, but this line is short held, quite steep, and not yet repeatedly tested, so it has only light technical significance. If price breaks below the cyan trend line in the morning hours of the New York session tomorrow, then I would expect that minute wave 2 is not over, and it may be continuing further sideways, probably another expanded flat 335. It can't move beyond the start of 1 below 2168.50. That's the risk at this stage to any long positions in this market at this time for short-term trades. If, however, as I expect is what's more likely to happen tomorrow when New York opens, if price moves up and away from the cyan trend line, then I would have a bit more confidence that minute wave 2 was over here, and we have a third wave within a third wave, within a third wave, within a third wave of 4 degrees to the upside unfolding. At 2230, minor 3 would reach 1.618, the length of minor wave 1. This short-term target fits nicely with the mid-term targets, the first one for intermediate 3 to end at 2332, where intermediate wave 3 would reach equality in length with intermediate wave 1. The second target, a more normal ratio, intermediate 3 would reach 1.618, the length of intermediate wave 1. Within intermediate wave 3, minute wave 3 and minor wave 3 can only subdivide as simple 5-wave impulses. Let's have a look at the alternate wave count at the weekly chart level. It's identical to the main wave count up to this point here. Cycle wave 4 within a bigger bull market at supercycle degree was complete. It's a combination here, and cycle wave 5 begins. This is the other structural possibility for the fifth wave, an ending diagonal. Ending diagonals most commonly are of the contracting variety, and all of their subwaves must subdivide as zigzags. That's why we have ABC for the first wave, would be expecting a deep pullback, an ABC zigzag for a second wave, and then another zigzag up for the third wave to move beyond the end of the first, and most likely to be shorter than the first wave because the most common type of diagonal is contracting, and then a fourth wave zigzag which must overlap first wave price territory but can't move beyond the end of the second wave, and then a final zigzag up to move beyond the end of the third wave to avoid a truncation, and likely to end only when it slightly overshoots the 1-3 trend line. That's really typical. And so overall, choppy, overlapping upward movement with a couple of deep pullbacks in there. The classic equivalent pattern is a rising wedge. They are terminal structures like ending diagonals, and all of those doomed to more than full retracement. Diagonal structures, ending diagonals, because they subdivide as a series of zigzags, are psychologically different to impulses. They include some corrective properties and they tend to show quite a lot of weakness. And when they're over, we usually see a very sharp, quick reversal. So far though, the structure up in here, the Elliott wave structure in here, supports the first main wave count quite strongly over this alternate. This alternate is provided as a what if. And the other reason I don't think it has a good probability is we're just not seeing evidence of good selling pressure. In order for price to make a deep, strong pullback, as this wave count expects, we need to see sellers enter the market more aggressively than they have been of recent weeks, even months, in order for price to be pushed strongly lower. Second and fourth waves of ending diagonals and leading of diagonals are usually very deep. They have a normal range of between 0.66 to 0.81, the depth of the first or third wave. That gives us a normal range for primary 2 of between 1941 to 1883. Primary 2 can't move beyond the start of 1 below 1810.1. Let's have a look at this at the daily chart level and we'll see a couple of problems where intermediate B, and I need to fix my label, it should be on this candle right here, ends down here. From this low to this high, intermediate wave C must be a 5-wave impulse, but it doesn't look like an impulse because minor wave 4 is grossly disproportionate to minor wave 2, giving this upward movement a rather 3-wave look to it. For this piece of movement, the main wave count has a better fit and a better look. Again, from this low to this high, this upward movement does not look like a 5, it looks like a 3, and again, for this piece of movement, the main wave count has a better fit. And this is possible though. I don't think we're about to see a deep pullback, but it's always a good idea when you're doing Elliott wave properly to have alternate wave counts to consider all possibilities. What if we see a new low below 2147.58? At that stage only, I would have confidence in this wave count. At the weekly chart level, some classic technical analysis. We had a bullish breakout from on-balance volume here. It came back to test this support line and on-balance volume, another bullish signal when it moved up and away. So we're getting bullish signals from on-balance volume at the weekly chart level, and as price is moving higher, we are seeing some support for volume at the weekly chart level. Last week we saw a doji which represented overall sideways movement, a balance of bulls and bears, with the bulls slightly more in charge than the bears to complete a green weekly candlestick, but it's a pretty good looking doji at the weekly chart level, and so a slight decline in volume for an overall sideways week really does make sense. We did see a new high though. RSI at the weekly chart level is not extreme, there is still further room for price to rise. At the daily chart level, let's make that a lot bigger and zoom right in so we can see this more clearly. It's better. At the daily chart level, the thing I want to draw attention to, which is the strongest signal we've had in quite some time, is this breakout from on-balance volume. On-balance volume recently has been tightly constrained below resistance at this purple line and above support at this yellow line. These lines are almost horizontal, they are repeatedly tested. They're not very long held, but they've been held for just a wee while now. We've got a very good, clear, strong signal from on-balance volume today with this small green daily candlestick. And so that's a strong bullish signal. Of all of the signals, indicators and oscillators that have been noted to not be working very well at the moment, this one has been working, and so I'm going to give this signal today quite a lot of weight in my analysis. This is good support for the Elliott wave count, which now expects to see a third wave up at a few degrees. Now I don't necessarily expect, because it's within a fifth wave at 2 higher degrees, that this one's going to be really normally strong. It could be relatively weak for a third wave, but we should still see some support from volume and some small increase in momentum at least should be expected. This bullish signal from on-balance volume may be our earliest signal that price is about to start trending with a reasonable bit of strength again at this time. Another small green candlestick with reasonably good volume but slightly lighter than the prior day. There is some support for the rise in volume, not as much as I'd like for more confidence, but these two upward days are stronger than this prior downward day. And so overall, we're seeing price rising a little bit with some increase in volume. Price is now constrained below resistance about 2185 and above support above about 2175. And so if we can see tomorrow break above resistance on a day with an increase in volume, then I would have even more confidence in the wave count. To the downside, any downward movement should find support now about 2175. Price is finding support close to the 13-day moving average. We've got a bit of an overshoot here and a long lower wick overshooting here, but overall the 13-day moving average is about where downward movement is finding support. That offers just a wee bit more support to the wave count. The Bollinger Bands are tightly constricting or contracting, and so after a period here expanding and now contracting, we would normally expect to see them expand again. That would be normal market behaviour. It remains to be seen if this market can again behave normally at this time. ADX is declining today, still indicating that the market is not trending. This is a lagging indicator because it's based on a 14-day average. Very importantly though, ADX during the sideways movement from price is still telling us we have not had a trend change. It's telling us here and here that we're getting some consolidation. Here it was telling us there may be a weak upward trend. If the black ADX line again can turn up and increase, then we would again have the early stages of another upward trend indicated. While price has essentially been moving sideways with an upward bias for quite some time, ATR has been declining. While price started to move upward here, ATR at this point started to decline already. There's something wrong with this trend, I keep saying. It's not normal. For a normal, healthy trend to be sustainable, we should be seeing price move clearly in one direction or the other with an increase in ATR. We see that happen, ATR increase when price falls, but now price is overall rising and ATR is clearly declining. After a period of declining ATR, we would expect, just like those Bollinger Bands, to start to see ATR increase again. It remains to be seen if some normality can return to this market if we are about to see an upward trend now, as on balance volume suggests. Let's see what happens. RSI is still not extreme. There's no divergence between price and RSI to indicate any weakness to upward movement. But I have noticed recently that divergence, even with RSI, which was previously quite reliable, is more recently, in recent weeks, unreliable. And so if I did see some divergence between price and RSI, I would not be giving it much, if any, weight. But the absence of divergence is also noted. Not given much, if any, weight, but it isn't there. There's still room for price to rise before RSI would become extreme. Stochastics is still pretty close to overbought. Now, if we're expecting the market still range bound, we'd be expecting resistance about 2185, support maybe about 2155, and for price to swing from one to the other in conjunction with stochastics making its swings. Stochastics isn't managing to reach oversold, it's reaching about the midline, and so we'd expect maybe a bit more downward movement from price following that approach to only end when stochastics either reaches the midline, let's be flexible with indicators in this market at this time, and for price to reach support around about 2155. But the problem with range-bound markets is that final swing that you expect from that approach doesn't occur, and that's when price breaks out. I'm going to give more weight again to this bullish signal from on balance volume and expect we're about to see a resumption of the upward trend, hopefully with a bit of increase in strength, volume and momentum. As price has been essentially drifting sideways with a slight upward bias, MACD has been declining. But this divergence between price and MACD has been noted before, up to here and here and here, and it has not been followed by a reasonable downward movement from price. That divergence between price and MACD just doesn't seem to be working. It's been noted at the hourly chart level, and yet it just disappears and price continues on upward. Let's have a look at VIX, inverted VIX. Now here's a little signal that previously was very, very reliable, has not been quite so reliable of late, but it has worked a couple of times. We saw some bearish divergence as noted in blue, some bearish divergence here between price. Price made a higher high, inverted VIX made a lower high. That indicated regular bearish divergence, and it was followed overall by 2 days of downward movement. And then we saw some bullish divergence. Inverted VIX made a lower low, price made a higher low. And so that was followed overall by at least, now if we don't count this day, if we count this day, today, at least 1 day of upward movement. But overall 2 days of upward movement. Now we've got some bearish divergence between price and inverted VIX. Price today has made a lower high below 15th of August, but inverted VIX has made a higher high above that point. Remains to be seen if it's going to be followed by some downward movement from price. We might be about to see minute wave 2 for the hourly Elliott wave count continue overall sideways and a bit lower to resolve this divergence before the upward movement from price occurs. And if that happens, then on-balance volume may come down to test support now at that purple line. That is possible. Overall, I am going to give more weight to the bullish signal from on-balance volume, but this small divergence between price and VIX indicates some caution ahead for tomorrow's session, a little bit of patience. Price might move a little bit lower to give us a better entry point. The advanced decline line, again, this is showing divergence, but again, this has been most recently proven to be particularly unreliable. I will give it no weight in today's analysis. I will note it and continue to note it, and I'll notice if it works or not. If it starts working again, then we can take it a little bit more seriously. But for now, I'll give it no weight. Overall, as price is rising, overall the AD line is increasing. That tells us that there is breadth to this upward movement within this market. There is some normality to this trend at that small level anyway. That's all for me at the end of the day with your extra video update. I hope that all of our members are looking forward to a happy Friday and a fabulous weekend.